I'm sure a lot of you have heard in the news now that interest rates are expected to rise. And so the first question you probably have is, why are interest rates changing at all? Like, why is this affecting me? What's going on? So to start things off, we need to first look at the Federal Reserve. So the Federal Reserve is in charge of the country's monetary policy. And this is really just a fancy way of saying they make sure that the economy continues to run smoothly. They make sure that inflation doesn't get too crazy. They make sure that unemployment isn't going wildly out of control, that banks have enough money to keep things flowing and this whole system doesn't just fall apart. And the way they monitor inflation and kind of keep things under control, especially when inflation starts to rise rapidly, as we've seen in the past year or so now, is that they can raise interest rates. And what they're increasing is something called the Fed fund rate. And this is a rate that the Fed sets that determines how much banks will charge each other in interest when they lend money back and forth to each other, because they do this all the time.